Hi there, welcome to Kneppy Invest and welcome to May 20, 2025. My thoughts today are with those people, wonderful people that live on the mid-north coast of New South Wales, particularly between probably just north of Port Macquarie and towards Newcastle. They've been experiencing some really heavy rain in that area. We're talking about Port Macquarie, Wauchope, Taree. My parents live at a little town called Harrington. Wingham, Gloucester, Dungog, and Bulahdelah, and all these other places. So, wishing you all the best. It seems like it's going to remain wet over the next, we'll say, 4 or 5 days. Yeah, 4 or 5 days. Bomb. Let's have a look. Don't have a look there. So, expecting continued some really good rainfall in that area, and it's still raining in between Port Macquarie. In fact, where my parents live, if you can see Crowdy Head, yeah, they're just south of Crowdy Head. So some tremendous amounts of rainfall happened in the last 24 hours. For instance, Taree had 277 millimetres of rain. So Taree, there it is, 279 millimetres of rain. So that's from 9 a.m. to 9 a.m. And so far today, yeah, so inland of Mount Seaview, 109 millimetres so far. So I like this little map on BOM because it has the river basins. So the Hastings River, Manning River. I would say there would be some major flooding in there. Yeah, major flooding for Manning River at Mount George, and it continues to rise. So I did hear they are evacuating some people in the Wingham area, that sort of place. So stay safe if you're in that area. But of course, if you are in that area, the last thing you want to listen or watch is this video because you probably have other concerns. Anyway, onto this particular video, the ASX Today, and a few things I want to talk about. Jamie Dimon, Stephen Van Metre, interest rates, and then we'll talk about the ASX Today. No surprise here because of the really interesting session we had on Wall Street overnight. The whole reason I want to talk about Jamie Dimon is because of what he said. Now, he does tend to be a little bit more bearish, but I actually do agree with him, what he said. And then after we go through the ASX Today, talk about what's happened on our markets, we'll go through the top 5 stocks of the day. And I have recorded the stock of the day. In fact, that stock of the day video was 16 minutes long because I also talked about the quality of this company, why it's one of the highest quality companies on the ASX. And that, of course, is Technology One. The company released the half-year results today, and they were pretty good. And there is no way I'm going to sell my shares in that company again. I did it once. I am not doing it again. No way, Jose. And then the other 4 companies in the top 5, share price are probably up a lot or down a lot. In fact, the other 4 companies' share price are all down a lot, including OFX Group. Thought it would have gone the other way. No. Also released their results. Share price the other day popped up 14% and then went in trading hold. And I thought that was sort of a sign, maybe loose lips, that the results were going to be good. No, the complete opposite. Monash IVF also released an update, not good. Dubber released a negative announcement, share price down 30% or so. And Kogan. Also noticed SmartPay released their results during trading. Share price did not move all that much. And then if I have time, I'll look at one of your comments. If I have time. I want to finish this video or just before 4 p.m. local time. So I have another 41 minutes. So let's see what we can do. Okay, so first thing I want to do is talk about Jamie Dimon. So he's the CEO of JP Morgan. He's been the CEO of JP Morgan for probably almost 20 years, I would assume. Yeah, 2006. Anyway, so what we saw overnight on Wall Street was really interesting. So we saw Moody's downgrade American credit, or USA, the credit rating, and we initially saw the American markets react negatively to that. So if you have a look at the NASDAQ and just have a look at the 1-minute data or 1-minute chart, yeah, the share price opened up in the first minute down 1.21%, which we expected. And there was an almighty bounce. And so straight away, this is telling us the market is just ignoring this. The market is just ignoring this. And then Jamie Dimon came out and said, what did he say? I'm just going to have to bring it up now. He said something about the market is being really complacent right now. Yeah, there was an article in AFR why Jamie Dimon says investors are extraordinarily complacent. We have been seeing some economic news in Asia that is a little bit negative. So Japan and China both released some negative news over last week. We saw some negative news out of the United States. We did see some positive news in Australia, but I think the market is being a little bit complacent right now. I actually do agree with him because I'm not sure the market is pricing in any potential impact of tariffs right now. There are still tariffs. So I do think there is a chance the market is being a little bit complacent. It reminds me a lot of what happened just before COVID-19. I thought that time the market was being a really complacent, and then we saw a massive dive in the market. I'm not going to say that's going to happen this time. I think if it does happen this time, it won't be as sudden. It will be the market just rolls over. Now, at this point in time, we could argue that the market is rising on a wall of worry. That happens a lot. But in a worst case scenario, if we do see recession, there could be a lot further to fall from here. So that's just a possibility. So sort of do agree with Jamie Dimon about that. The other thing I want to talk about is Stephen Van Metre. He released a positive video. I just couldn't believe it. He released a video saying you should go buy shares or something like that. I was watching it going, what? What's he talking about here? I won't get rid of the volume. I won't replay it. My most important video this year, you must act now. He's bullish. I was like, what? Stephen Van Metre bullish. And then, funny enough, he's getting a lot of disagreement and disagree with heading down. Now, Steve is bullish. Things must be bad. Hey, Steve. Hey, if Steve says buy, is it time to sell? Stephen, oh my God, Permanent Bear is going to buy stocks. LMAO. It was weird that he just seems really bullish about the stock market right now. He's been ultra bearish. So that's interesting from Stephen Van Metre. Did not think I'd ever see that. And maybe this is a sign of the top. Maybe this is a sign that things cannot get any better from here. If an ultra bear is suddenly saying we should be buying stocks right now. The other thing is interest rates have dropped as expected, and because it was to expectations, we haven't seen anything other with the stock market locally. In fact, our stock market has dropped through the day. Now, I did have a look at their statement. Probably the most important thing is the RBA statement. I did have a read of this, and then I just put it in ChatGPT to summarize it. And nothing, I'll be honest with you, nothing of note here. Why is my rolling, there we go, not working. So nothing of massive note, in my opinion, right now. Inflation is easing, monetary policy has worked. Risks now more than balance. Global risks have increased. Domestic mixed signals. I was talking about this last week. We saw wages and a robust labour market, but they also mentioned something I missed. Businesses report weak demand, making it hard to raise prices. That's probably true. Economic outlook, growth in household consumption is picking up, but more slowly than expected. There's a risk that it could remain subdued, potentially weakening the labour market. Alternatively, employment outcomes may surprise on the upside, giving strong leading indicators. So this rate cut is a modest easing, not a pivot to aggressive stimulus, which is what we don't need right now. And Governor Bullock's message, we're easing off the brake, but we're not hitting the accelerator. And of course, we're also seeing bond yields in America rising. And they did go past 5% at one point, but they did ease back, if I remember correctly. Let's go have a look. Yeah, they've eased just below 5%. So those who think there's no validity to technical analysis, have a look what's happening with bond yields at 5%. It's got to 5%. 1, 2, 3, 4, 5, 6, 7 times in 2025, and it failed to break above 5%. So 5% is a really important level. Now, it does look like there is a chance it might break above 5%. So I think the reasoning behind this is the bond yields are rising because people want more return from their US debt or something like that. Anyway, so bond yields getting close to 5% in America, 30-year bond yields. Anyway. Okay, now on to the ASX today. So a positive day, but it was up. Actually, I can't remember what it was up on open. I can't remember. It was about 0.8%, 0.9%. Suppose we could have a look in a second or so. Mining down a little bit. Pretty good day for tech. Okay day for small caps. And yeah, it was up maybe 0.8, 0.9. There was a little bit of weakness during the day. We did see a little bit of a spike at 2:30. So they released the interest rates. Was it 2 or 2:30? I can't remember. Anyway, we didn't see a massive spike at that point in time. So it shouldn't, we shouldn't have seen a spike in our market because it was to expectations. Maybe, I think the bond market was saying 100% chance of 25% basis, 25% cut. No, not 25%, a 0.25% cut in rates and a 0% chance of 0.5%. And I suppose 0% chance of no rate cut. So it was perfectly priced into our markets. Where to find better income as rates drop? Yeah, it's not dropping all that much now. Hold on to your horses, people. Okay, so let's have a look at the best and worst performing sectors. IT, pretty good day. Telecommunications, real estate, financials, discretionary, all up by over 0.5%. Banks up 0.8%. It's really interesting because when interest rates started to rise, that was deemed to be really positive for the banks. And now they're dropping, and that's deemed really positive for the banks. So which way is it? I don't know, but looks like banks have had a good day today, up 0.8%, which means CBA continues to be the most expensive company in world history. And I will stand by that. No, I won't. I'm joking about that because I haven't studied every single company in world history, but it's getting to the point where I just have to question anyone who's buying CBA right now. I just have to question why. Why? Anyway, so a negative day for energy and utilities. And I suppose materials flat. We'll have a look at the ASX 20 up 0.76%. So I'm assuming the banks had a good day today. And how many companies up? 15 up, 5 down. 5 companies down: REA Group, Fortescue, Rio Tinto, Woodside, BHP. So a little bit of weakness in iron ore. So that can actually drive our market down or up depending on iron ore prices. And I'm thinking iron ore is down because of China. I did have a look at trading economics, and there was a little bit of negative news from China over the last few days. I don't know if we can go back in time here. Can we go back to a previous day? I don't know. Monday, May 19. Yeah, here we go. So there was a little bit of negativity when it comes to China, some macroeconomic stuff in China. Anyway, so let's go back to the ASX today. And the best performing companies on our market have been WiseTech, Macquarie, ANZ, Goodman Group, and NAB. Where's CBA? Oh, maybe I was a little bit quick for CBA. Oh, up 0.17%. I struggled to see how CBA will go much higher from here, but I've been probably saying that for the last 6 months or so. But the higher it gets, without any significant increase in profit or anything like that, which it won't have, the more expensive it becomes. And then I think the bigger the bubble becomes. And then when it bursts, the drop is going to be fantastic. Not for those who are holding it, but it will be a pretty big drop for CBA. Anyway, so it's all about risk reward. What sort of reward are you getting from buying CBA right now? You're not getting much of a dividend yield. You're not getting much of capital return because based off probability, and there's way more risk that the share price could halve from here. Share price could halve for Commonwealth Bank, and then it'll be okay value, just okay value, not good value, just okay value. That's extraordinary. Okay, so I should stop talking about CBA. Okay, so let's turn our attention to the top gainers today. This is where it might become interesting. Haven't gone through the top gainers and top losers yet because I already decided on my top 5 stocks. And a lot of times I'll go through top gainers and or top losers to find some inspiration. Didn't have to do that today. Now, I was never going to include Zoono, but I did see this company release an interesting announcement. But this company is small. They had a lot of revenue because of COVID-19. They used to sell some antibacterial wipes or something like that. And it was just a very small window where this company had pretty big profits, pretty big cash flow, and then everything just dried up because everyone oversupplied themselves. Now, share price up 61.54%, share price 6.3 cents. So the company did release something that was, I suppose, okay. sort of a contract or deal with exclusive agreement signed with Sharp Pack. I was going to say Sharp Pack. Anyway, so so why does my there we go. I was going to say, why does my scroll button not work? But it's working here. One of the things I like to look at in these sort of announcements is any sort of financial numbers. So here we go. So minimum annual purchase for UK soft fruits only are, and now this is weird. This company could have completely changed what they're doing, and I wouldn't have known. No, it looks like they still in antimicrobial products. Look, I even mentioned here, when around 3 years ago, the company's traditional markets for antimicrobial products were decimated by oversupply problems and dwindling public sentiment, the board made a decision of necessity to focus on the pursuit of niche sectors which it believed suited the characteristics of its products and where significant sales opportunities existed. One such sector introduced by Zoono, by OSY, was the food supply chain sector, in particular the application of companies' products to food packaging for the purpose of extending food shelf life and reducing food waste, a challenge for supermarkets and food producers across the globe. That is interesting. They have pivoted. That's a pretty good move from management. So it looks like this particular deal is in regards to Shark Pack, which is the UK division of a leading European manufacturer of packing solutions for the food industry. I might go through this particular announcement a little bit more because it does sound interesting. And the minimum annual purchases for UK soft fruits only are 4.3, 4.9, 5.9, 7 million to 8.6 million in the next 5 years. But either party may terminate that agreement with immediate effect if the other party something happens to it. Anyway, so it's not my favorite type of announcement, because these numbers are not set in stone. By the way, these are New Zealand-based companies, not set in stone, but it does make the company a little bit more interesting moving forward because they are pivoting and they're not solely reliant on the one sort of product. Now, in saying all that, I really haven't looked at this company for probably 3-4 years, maybe. So, I'm going to say I no idea what the chart's going to look like. I'm just going to put in look at the share price went on a massive run back in March 2024, so just over a year ago, and that run just failed fairly quickly. So that could happen again today or right now. But the share price has gone a little bit bonkers today. Some really nice volume. So the big difference between now and what happened in March 2024 is the volume, much higher volume now. So this is, I suppose, an interesting announcement from Zoono, and that's why the share price is up 61.54%. Dateline Resources, can't remember what this company released, share price up 37.84%. Fully funded for Coliseum Gold feasibility study. There you go. Fully funded for a feasibility study. Not the sort of announcement that's going to get me excited, but it got the market excited. So let's have a look at the chart for Dateline Resources. The chart looks pretty good. Have I talked about this company recently? I think I have, because I think I would have noticed this particular chart. It's actually a good-looking chart. So really good volume coming in. We had that really good update, share price up 200%. The next day, share price was down 18%, but then the next day, share price rose 68%. And sometimes that'll happen, and you can see a fair bit of volatility in there, but the share price keeps on rising and keeps on getting to a new high. That is telling us there's a bit of strength to Dateline Resource, so I should give this company a little bit more credit. And there's another one here, Kingston Resources. They sold something, Kingston Resources. Kingston Resources sold one of their mines or projects for $95 million, if I remember correctly. Yes, Misima gold project sold to OK Teddy for $95 million. Fun enough, when I was working in one section of the Bureau of Meteorology, I was working in the a commercial section for a while, and one of our clients was OK Teddy. I'm pretty sure that was in PNG. That little project. It's in the mountains of PNG. We had a forecast, heaps of stuff for that particular project. Anyway, I think it was that. And this was many, many years ago. Anyway, so they sold a project for $95 million. How big is this company, by the way? KSN, $76 million. What is happening? I'm going to have a look at this investor presentation. What are they doing with this money? What are they going to do? Kingston Resources. Let's have a look at the chart. for KSN. And, oh, we have seen a bit of selling. Not my favorite looking chart. Share price opened at 13 cents, is currently at around about 11.5 cents. But at least we haven't seen consistent selling. Share price is around about the highs we saw back in October 2024. Share price looks like it's been going sideways for a long time. Look at that. Been going sideways for about 3 years. And finally, we're seeing share price pop up. I'm not confident that this will continue going up, but I'm going to have a quicker look, not a quicker look, I'm going to have a longer look at this particular presentation. I didn't realize they released it. And the reason I didn't realize is because they released it at 1:29 p.m. It's a big gap between the announcement and the release of the presentation. Just wish they released it at the same time. Okay, so pretty good day for that company as well. Nanovu, NVU, I do remember this company releasing something today. Let's have a quick look. Why not? The company launches Edge AI evaluation to extend drone flight time. It's a big no for me. Nanovo for me, I mean. Let's move on. MTM Critical Metals. So we've seen a lot of nice rallies today. And this company released nothing. No sensitive news. So let's move on. And I think we can turn our attention to the top gainers by market cap. And there it is, Technology One at the top of the list here. Stock of the day. And Zimplat's up a fair bit. AFG, why is that up a fair bit today? I didn't see this company release anything. And that's because they didn't release anything. I'm just going to have a quick look at this chart. Why is the share price running up? Is this a preemptive breakout? Oh, have a look at this nice looking chart for AFG, Australian Financial Group. Really nice. I'm not sure if I'd buy on this. If the share price was breaking up above $1.80, I would be way more interested in this breakout. And the reason that is there's a nice little resistance level there, and if it was breaking, although if you can take it back further. Anyway, so this I think is just there's a fair bit of positive sentiment behind this company right now. I'm going to just keep an eye on AFG. This is interesting. I'm going to actually put it into one of my watch lists. For those who don't, you can do this in TradingView now. Go there, and I'll put this into this watch list. So if you don't know how to add a company in your watch list, go to, there's these three little dots, more, and then you can add a company to a watch list. So they have changed things, TradingView, quite a few months ago. Oh, Mika Metals up. Happy with that. Electro Optics up again after a pretty good day yesterday. And that's interesting because the chart was looking good yesterday. And I was thinking, oh, this chart looks good. And this chart must be looking even better today. This is a nice looking chart. Look at the volume as well. Big volume coming in. This could have been an upgrade from a broker. I'm wondering. Let's have a look. Just refresh this to make sure it's new. Capital Brief. A coalition implosion. Coalition has split for the first time in really? Interesting. Okay, and here we go. Electro-Optic stocks rise further following 53 million counter drone, but there's no explanation. Okay, let's move on. Well, back to the top gainers. And I think that might be it. Ooh, EZZ going back up higher. Let's have a quick look at EZZ. I think the selling has come to an end. I think the downtrend is over. The low has been reached. I'm not willing to buy just yet EZZ, but I definitely think the downtrend has come to an end. It's still looking cheap, but not the biggest fan of the most recent quarterly, but looking much better for that company. Okay, now on to the top losers. We're going to see quite a few companies in my top 5 stocks in this list. Daba is one of those companies. OFX Group is one of those companies. EP&T is not. Pioneer Lithium is not. And no other company I really want to talk about here. So let's go top losers by, although there is one company, Infomedia. That is a pretty big company, relatively speaking. So that company has a market cap of 429 million. Share price is down 12.7%. That needs further investigation. I don't remember this company releasing anything. No. Why is the share price down? Did they do a capital return or anything like that? No. No. I'm just having a look at the chart in ComSec. Big volumes coming through. What's happened with Infomedia today? Why is Infomedia down a lot? Infomedia share price down. News. Let's have a see if there's any news. No news. This could be a negative broker report or something. Yeah, so interesting down day for Infomedia. Typically, when a share price of a company like this is down 10.77%, something has happened, particularly when you see that big volume coming through. So I am interested with Infomedia. Okay, top losers by market cap, Nanosonics. That's another one. I don't think Nanosonics released anything today. Let me have a look. Maybe there's just noise. Yeah, I'm just going to say this is noise. Yeah, this is noise for Nanosonics. Kogan, top 5. Monash, top 5. Yeah, all my top 5 stocks except for Technology One I've just mentioned in the last second or so, or last minute or so. And apart from that, nothing else I want to talk about. So let's get to the top 5 stocks of the day. But before that, a few companies did not quite make it. You have to do better. If you want to make it into Kneppy's top 5 stocks of the day, you have to do better. Tower have to do better. Share price up 3.83% on them reporting strong half-year profit. This is an insurance company. I'm pretty sure it's New Zealand based. And the chart has been looking okay. It's not a bad looking chart for Tower Limited, but a lot of the insurance companies' charts are looking pretty good. But be better, Tower, if you want to make the top 5. Serco. I thought this was a nice little update from the company. Share price is down, but look at the volume, very low volume and trades. So it's liquidly traded. 4-year results. That is today, isn't it? Yeah. 234 pages. I am not opening this up. I had a quick look when they released it. I thought it was okay. Nice growth they're expecting, but not yet profitable. That's my biggest thing about Serco. And my other negative thing about Serco is just a little bit of lack of liquidity for this company. And the chart is a big M for me. So do better, Serco. And what else was there? Oh, there was another company here who did a deal with BHP. That company is Vision Flex. Share price, yeah, partners with BHP. I moved on when I saw the share price was 0.2 cents. I have no interest if your share price is 0.2 cents, like 0.1, 0.2, 0.3, 0.4, 0.5, 0.6, 0.7, 0.8, 0.9. I have no interest. I don't care if you're partnering with BHP. Look where your share price is, 0.2 cents. And have a look at the summary. Yeah, so I just pip traders here. So not for me, Vision Flex. So I'm not even going to talk about their partnership with BHP. Do a share consolidation, Vision Flex managers. Do a 100 to 1. Get your share price up to 20 cents. Okay, now on to the top 5 stocks of the day. And we'll start off with Kogan. Kogan, share price down 9.18% on a bit of an update. Yeah, Bay. I was gonna say Bay. I was gonna say Bay Business Update, but it's May Business Update. Seems like they're having a little bit of problems with Mighty Ape. Some technological issues. So gross sales of 24%. They sort of mention it somewhere. There is Mighty Ape. Yeah, so seems like things are going okay with Kogan.com, but Mighty Ape continuing to be impacted by technical challenges following a website platform upgrade announced in February 2025. I do question why companies like this have these technical challenges. What's going on? So I do own Plex. I am a subscriber to Plex. And they updated their app. was it like the 1st of April? And the update was horrendous. It was a horrible app, and I'm looking for alternatives now. And I just I've been wondering, why did you upgrade your app? Why? Because there's been a customer revolt against Plex. So Plex is you can stream your own content straight to your TV, that sort of thing. Anyway, so Mighty app been having some technical challenges, which has affected sales performance and inventory levels. Anyway, so early signs of recovery are evident, but you're talking about continue to be impacted. So Kogan just continues to have these little issues. Every so often, more and more issues. I want to really like this company, but I don't know if I can. Anyway, so and the other thing the other thing about Kogan is they are competing against Amazon, and geez, Amazon just knocks this company out of the park. I did buy something from Kogan many years ago, but I just buy everything I need from Amazon. Sorry, Kogan, but that's the way I am. Anyway, let's have a look chart for Kogan. And it's all over the place. Although, now, even though I'm sounded a little bit bearish right there, I'm going to be. So if the share price falls to like 260, so it's a little bit off right now, that would be an interesting level. And even $4 going back over the past 18 months, $4 is an important level for this company. So I did not put that line in the right spot. There it is. So $4 is an important level going all the way back to October 2023. So what's that? 18 months ago. Does seem like that's a nice little support level for Kogan. So, and we have seen a little bit of buying coming in today. But anyway, so not the best news for Kogan, but share price is at an interesting level. Coming in at number 4, maybe this should be a little bit higher, but I don't know why anyone will be buying Dubber at all. So Dubber Corporation down, share price down 44.74%. Customer update announcement. I'm going to be honest with you here. I skipped this announcement because it just said customer update announcement. I didn't care about it. I skipped it. And then when the market opened, I saw Dubber was down a lot. And I went, oh, this customer update announcement must not be good. So, and it's not good at all. Looks like the management was surprised by a loss of a customer. Anyway, so I'm not going to try to pronounce this subsidiary of Dubber, Ariandi, advises that Virgin Media O2 yesterday verbally confirmed that it would not renew their existing agreement to provide call recording and wholesale SIP services that expires on 30th of June 2025. As requested by VMO2, we submitted, when I say we, I mean Dubber. Dubber submitted a formal proposal for extension on 14th of May. So their precipitous, interesting wording here, so their precipitous decision was sudden and unexpected. It's not our fault. It's not our fault. That's what they're saying. The VMO2 procurement process has proven opaque. Disappointingly, the group first became aware of their intention to terminate indirectly from another market participant earlier in the day, which we were then obliged to urgently clarify. We now understand that VMO2, they have been dual recording calls with an alternative provider for some time without our knowledge. So Dubber is concerned about the potential for security and operational security exposures to VMO2's customers. So not a good day for Dubber, and this does impact their financials, of course. So the impact to the group is expected to be material, and if the termination proceeds, we'll see a gross margin reduction of approximately $7 million. Now, it did look like things were turning a little bit more positive for Dubber in the most recent Appendix 4C, and the reason behind that isn't really evident in the numbers, because if you go to which one was it? If you go to their section 1, receipts 10.6 million, operating cash flow negative 8.9 million, but there were some one-offs in there. Not one-offs, I think sort of one-offs, but these one-offs were coming to an end. So they were expecting much more improved operating cash flow, free cash flow performance in the next few quarters, and maybe this has put a dent to those expectations. So let's have a look. What were those? I'm going to go back to this announcement. They did mention that in the commentary because I remember looking at it going, oh, so much operating cash flow negativeness. So where they mention this, somewhere in here, it could be when they talked about cash flow. So where did I mention it? Here it is. Operating cash payments include 7.6 million of abnormal or non-recurring costs, including historic tax repayments. That's right. Costs related to the ongoing investigations into the misuse of funds and restructuring costs. So it seems like they don't have to pay that anymore. It was all over. So it did look like that the company was moving more towards becoming cash flow, not cash flow positive, but less cash burn. But I think that this particular announcement has damaged those expectations, I'm assuming. Anyway, so this is the chart for DOA. Chart was looking okay, and now it's not. Now it's not, and it's going back down to 2 cents. And it wasn't that long ago the share price was at these levels, around about 2 cents. Anyway, so not the best day for DOA. Okay, coming in number 3, we have Monash. IVF, share price down 11.76%. Profit guidance updates. So these are my favorite type of announcements. Profit upgrades, profit downgrades. What is this one? It's a downgrade because the share price is down. Well, the share price is not down. Yeah, the share price is down because of the downgrade. It's not a downgrade because the share price is down. It's the other way around. Share price is down because it's a downgrade. I think I said that wrong. Anyway, so profits guidance update. Before I opened this, I was thinking, oh, this could be positive because up until I opened up this announcement, everything was positive today. And when I say everything, I'm talking about Technology One. Anyway, so it's not positive at all. So expecting underlying group net profit after tax to be approximately 27.5. Previously, they were expecting it to be between 30 and 31. So we are talking about roughly a 10% drop. No, a 10% decrease. No, a 10%, it's not a decrease, it's a 10% lower guidance for profits or underlying group profit. Now, a lot of times, what I do prefer in these sort of announcements is why. Why is it a downgrade or an upgrade? And they mentioned the revised guidance reflects the company's assessment of softer market and operating conditions in March 2025 that worsened in April 2025 across all of the company's geographic markets. Does not sound good. Operating conditions have improved in May 2025 with month to month or month to date at stronger levels in March and April, but not sufficiently to offset the impact from these months. Then they also had that Brisbane incident that might affect the company as well. Did they mention? They did mention that, I'm pretty sure, yeah. The companies continue to monitor key indicators and any implications that may arise from the Brisbane incident on May or announced on 11th of April, including Queensland and Australian new IF patient blah, blah, blah. So there could be further ramifications moving forward from that. But I think the longer they go, the more likely people are going to forget about that. So let's have a little chart for MVF. This was on the list of some of you, I do know, and I wonder if it's still on the list. So share price had a nice bounce, hit the 25-day moving average and started to go down again. But the share price has not fallen below the lows we saw on that day, March or April 11. Share price has remained above 69 cents, so but very close to that level, but not the best looking chart for Monash IVF, but there might be some value in it at these levels. I don't know. Okay, coming in number 2, we have OFX Group. This one is really interesting for one simple reason, is because the company share price went up 16.4% on the 19th. Well, that's yesterday. Then the company went into a trading halt at 1:58 p.m. because the share price was surging. And in the trading halt, or their response to price query, they mentioned that they are releasing results. And yeah, they just mentioned somewhere here they are releasing results. Actually, I didn't read their response. I did read in the trading halt they mentioned they're releasing results. So OFX is currently scheduled to release its financial results today. Expected that the full year results will be released to the market prior. OFX does consider that some of the information relating to the full year results to be information that a reasonable person would expect to have a mirror effect on the share price. However, OFX considers that such information is and remains confidential and is able to rely on listing rule 3.1a. The company has noted that the change in price of OFX securities and significant increase in the volume of OFX securities traded today and accordingly has requested a trading halt. Oh, the company requested a trading halt. There you go. That's interesting in itself. It's interesting in itself. Okay, so my first thoughts was that someone saw the results and were thinking, oh, these are really good results. I got to buy. And I think those thoughts are now gone. Completely gone. I thought ASX should have to do an investigation. Those thoughts are completely gone because those who were buying yesterday and the share price did rally 16.4% up on pretty good volume. Share price closed at $1.31. And those people are now kicking themselves because share price is down 34% on the release of their results. So I didn't go through these results in a fine-tooth comb, but I'll assume that these results were negative. Commentary was negative. If there is a bit of a table here, everything's down across the board. But again, it's how these results compare to expectations. So maybe these results are a little bit lower than expectations. I actually haven't really had a look at it. Wonder if there's any mention in Capital Brief. Yeah, I should have had a look at this before I started recording. But for me, the more interesting thing was that the share price was up significantly yesterday. They had to go into trading halt, which to me was hinting that the results were going to be better than expected. So we've completely gone in the other direction. Anyway, so everything's down. Turnover is down by 0.9%. Underlying EBITDA down 10.7%. Underlying profit down 18.2%. Statutory profit down 20.6%. Net cash held down 12.3%. It just sounded pretty. I do remember reading this. They were talking about decreasing financial performance in the next 2 years as well because they're trying to. I forget what they were talking about. Where is it? Oh, it does mention here a net operating income was below its expectation of growth in the second half and a 28% underlying EBITDA margin. So it does look like they missed expectations as well. OFX managed expenses well down 3.5% on PCP, not the drug, but previous corresponding period. But they do mention somewhere in here that they are expecting something to be down over the next 2 years. See if I can find it here. Maybe it's in the outlook, yeah. In light of the global economic uncertainty, the company is not providing NOI, which is net operating income, I think, guidance for financial year 26. The group will no longer target positive operating leverage in financial year 26 and 27 as it invests in its accelerated growth strategy. And they also mentioned while our underlying EBITDA margins will be lower in financial year 26 and 27, so it's EBITDA margins. So I do think that looks like the results were a little bit below expectations, and also looks like the company is sort of hinting the next 2 years are going to be a struggle for the company, and hopefully, that's a big hopefully they can come out of financial year 27 as a stronger company. So a few negative things in this particular announcement from the company, and that is why the share price is down 33%. I think the other reason why the share price is down 33% is because it went up 17% yesterday. And yeah, the chart looks pretty bad. Really interesting chart. Up a lot yesterday, down a lot today. And by the way, last time the share price was this low was never. There you go, was never. Lowest share price has ever been for this company, going back over 10 years. This is not the chart of a high quality company. No, it's not. And the company coming in number one, the only positive in the top 10 is Technology One, share price up 12% on the half-year results. Really good results from the company. No and it's sort of an upgrade as well. Yeah, here we go. SaaS Plus delivers upgrades, financial year profit growth to 13 to 17%. And that's why the share price is up 12%. My only concerns about Technology One is the valuation, but revenue is expanding or accelerating, profits accelerating, and even the chart is accelerating upwards. So pretty good looking chart for Technology One. However, who is willing to buy at these levels? That's a big question, because you have to be fairly confident that the company can continue to grow, maybe even accelerate the growth moving forward. So Technology One, I've done a standalone video on this company, and that standalone video goes for 16 minutes. I won't do any of your comments today because I am running a little bit longer than expected. So that'll be it for today's video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.